Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Jake Ruth, co-founder and CEO of Stock Unlock, as well as Daniel Pronk, co-founder and chief operating officer of Stock Unlock, to discuss fundamental-based investing for retail traders. Stock Unlock was founded by three retail investors who have a passion for long-term fundamentals-based investing and is working to transform everyday people into successful investors. It is great to have you with us, Jake and Daniel. And Jake, I'd like to kick it off with you. How has Stock Unlock helped users handle and invest through rising interest rates?
Yes, we get this question all the time. So our thousands of Stock Unlock subscribers around the globe are often asking themselves this very question. We have developed a very simple 1 to 5 scoring system, which we call our Insight Score. It looks at several different financial categories of a business across their profitability, growth, and it makes it really easy for investors of all levels to analyze the financial health of a business. Daniel Pronk uses this all the time on his very big YouTube channel up in Canada. Why don't you walk us through a little bit more how this helps our users out?
Yeah, so Stock Unlock scores the financial health, as Jake said, of every business or every stock. And one thing that we're hearing a lot about in the rising interest rate environment that we're currently in is that it's negatively affecting businesses. But rising interest rates typically affect or negatively affect businesses that have a lot of debt or rely on debt to fund themselves. So in other words, these are unprofitable businesses. So if they need to continue taking on debt, then that cost of capital is going to increase quite dramatically. However, what we don't hear a lot being talked about is that rising interest rates can actually benefit businesses with strong balance sheets as well, because they can get a higher return on their capital or on their cash. So Stock Unlock helps our users find these businesses by, again, scoring the financial health of them and just very easily and quickly pointing out if a business has a good, strong balance sheet or a bad one that is a higher risk. So that's really how we help our users in higher interest rates environments.
What is your view on the market today? Do you think the Fed is going to start lowering interest rates? And if so, have you adjusted your portfolios to handle that?
Great question. And I wish I had a crystal ball just like everyone else to try to predict what the Fed is going to do. But the truth of the matter is we can't. And now I won't bash on any particular investment style, but we know that there are a lot of them out there. What our bread and butter is here at Stock Unlock is long-term fundamental-based investing. As Peter Lynch loves to say, it's really hard for a business to go bankrupt when it has no debt. So tying back to our insight scores, we make it really easy for investors to see how much cash does this company have? Are they profitable? Are they going to be able to service these debts? Because a funny thing happens when you have really strong, amazing companies, they end up persisting throughout time in different interest rate cycles. So whether the interest rates are high and low, really great businesses that carry low amounts of debt or are at least able to service that over time are generally going to be in a good spot. So to answer that question for you, am I moving around my portfolio because of interest rates? No, because I want the stocks that I own very long term to do well throughout all financial environments.
And Daniel, what are some of the key criteria you look for in an investment then?
Yeah, some of the key criteria that I look for is strong management, if the business has a moat, and if the business is selling for a margin of safety. And there's a bunch of different metrics that you can look at to try and help you get a sense of if a business has all three of these things. So for example, if a business has strong management, it will typically have high margins, high profit margins, and it will typically also have a high return on invested capital. If it's selling for a margin of safety, it will typically have a free cash flow yield above what bonds are currently yielding, which is exactly how The Intelligent Investor, the best book on investing ever written, says a margin of safety is. So I look for a business to have a higher free cash flow yield than what I'm getting from a bond. And then for a business to have a moat, it also just needs, high ROIC and high profit margins. That can be an indicator of a business having a moat as well. This is very important in my personal investing, so it's absolutely critical for me and for our users on Stock Unlock to have accurate data and data that they can trust, which is really why we're here and so excited to be at the Nasdaq and partnering with the Nasdaq, because having that accurate information and data on our platform, again, just increases the trust with our users and is really critical to having a good portfolio and good investments. So, yeah.
All right. Daniel, Jake, enjoy your day at MarketSite. We appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.